Hi, welcome to the Market Alert for Monday, 13th of November 2023. So big tech and the Bitcoin bid, bonds, bullion and biggest shorts battered sentiment slumps. The Magnificent 7 stocks are up for 10 of the last 11 days, adding stunning 1.3 trillion to the market cap. As I said before, Fridays, they love to rally the market on a Friday, makes them sleep better over the weekend, despite bad news. Stocks rip into weekend despite hawkish Fed comments. Consumer inflation expectations rise. Tech leads equity rally. Fed's Bostic resist talks of another hike. Fed's daily not ready to rule out more hikes. So there you've got a bit of a paradox as well. Economic news today, absolutely nothing. And tomorrow we have claimant count change from the UK, earnings, etc. Just have a look, see what we've got for the week. We've got a CPI on tomorrow and CPI for the UK as well on Wednesday. So it's all about CPI this week, nothing else really. The others just retail sales and core PPE, that sort of thing. So a big one for tomorrow, US CPI numbers, Wednesday CPI UK. See what that has impact-wise on the markets. Looking at tomorrow though, looks like it's all unchanged at the moment. Well, certainly for the month-on-month, the year-on-year to drop again. If it does, then the market's going to continue to move to the upside. Okay, let's have a look at the markets. Kick off with the Dow. So in the Dow on Fridays, the market ripped higher. It managed to take out the 34,146. However, overnight the market is heading back down at the moment. Maybe it was just seize the opportunity situation and just ramp prices higher. You can see just before the Dow opened, the market was stuck in a range, rallied up a bit to the 200 MA, then came back 89% and then just ripped higher, as can be seen there. The market sitting at the DP at the moment and finding support. In the DAX, still struggling with the 78% retracement at 15,358. The market sideways, however, it is above the 50 EMA and also the 5-bar moving average. So all it needs to do is to take out the 78% retracement and continue to the upside there. In the 30-minute chart, it was downhill until the Dow opened, and that brought the market back in the electronic session, which you can see there. Overnight, the market down towards the S1, but trying to get back above the BRN here, which is currently sitting at 15,250. Need to take out the DP there as well. And then you've got the high and the close as well on the upside there that will need to be removed. So in the S&P 500, the 4398 has been taken out. However, the market's looking like it wants to go back down below this, but finding just a bit of support there. It's above the 200, above the 50, and also the 5-bar moving average there. So looking fairly bullish still for the S&P. Before the market opened, the cash market opened on Friday, the market down and then just ramping higher. And in the FT 100, down and down on the overnight as well. So it's sort of de-linked itself at the moment from the rest of the markets down. But coming back on the electronic session with the Dow, then back down overnight. Needs to get back above the DP, the 20-bar moving average and the 50 EMA. It's got the 200 MA sitting at the close as well. So a bit of resistance there to the upside, with no economic news to move prices. But of course you don't need the economic news, because all you have to do is make a decision, and then what they do is move the markets higher and then add in some economic news or some news announcement to justify what it is they've actually done. In the dollar, continuing to move up, we're back above the 5-bar moving average, just need to get back above the 20-bar moving average, and as a result of this, the silver market and gold market have been hammered, which we'll look at now. So as I said, silver's going down below $20 and it's already making tracks. It's going to get seriously hammered in the next few weeks, as you will see as they move the market back down to the $20 level and then try and send it through this area as well. You can see at the London fix the activity that's going on, and already overnight they've sent the market below the S1. It'll reverse later and continue down. No interest in allowing this market to move to the upside. The same with gold. They went to $2,000. They said, no way, Jose, you're not moving it above that. We're going to hammer it back down, and you're going to see this go back down to the lows as well. because, like I say, the central banks want to keep accumulating and they don't want to pay over the odds for it. 30-minute chart, now it says it all, doesn't it? There you go, and you're going to see a lot more of that. When you contrast how much the US dollar's moved, barely moved, to what they've done in the metals market, again, you can see it's disconnected and not based on any reality. It's about suppressing the price of the metal so that the elite and the central banks can buy gold at a cheaper price. Using tools can give them that opportunity to do so. And in the gold-silver ratio, well, there you go. I keep saying watch the 90 level, and we're heading there already overnight. In the last 3 days, the market moving to the upside there, and will continue until it breaks through 100 on the upside. So we've got plenty to go there. That'll send silver down below $20 as well. Okay, that's it for this one. No news today. The market's going to make its own direction, so don't be surprised if it continues to move to the upside. But first of all, has a bit of a shakeout to wrong foot people at the open. Okay, that's it for this one. As ever, thanks for watching. See you in the next.